Why is SpaceX stock surging today? The SpaceX IPO prediction is dominating chatter, but the real trade lies in the SpaceX technical analysis breakout levels. SpaceX just ripped 19.5% in a single session. The price is now sitting at $192.47, and every moving average you can draw is buried 50 points below. Right now the entire trading community is asking one question. Is this the start of the IPO melt-up of the decade, or is it the most aggressive bull trap we've seen in years? There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade today, with stops and targets that match the volatility reality of this instrument. Here is the instant verdict for today's session. Trend is strong buy on every time frame, from monthly down to the 1 hour. The month is strong buy, the week strong buy, the day strong buy, and even the 5 hour and 1 hour are pinned at maximum bullish. That is the definition of a momentum melt-up. But here is what the herd is missing. The RSI is at 100. Not 90, not 95, 100. Stochastic is showing an extreme reading, and Williams %R is at negative 0.223, which is basically the most overbought signal an oscillator can print. The entire market is long and feeling invincible. That is the exact environment where the fastest corrections ignite. My session bias is range expansion with an explosive breakout above 202 or a violent mean reversion spike that punishes late chasers. Write this number down. If we break below $189 today on a 4-hour close, the entire structure resets and the pullback could accelerate to the 162 pivot. That is the single invalidation level that flips my bias from buy the dip to defense. Here is what matters most. The herd is positioned for a straight line to 250 because of IPO headlines, and that crowding makes the liquidity pool below 189 extraordinarily deep. Market makers see that order book. Keep that in your mind. Let's walk the charts from the weekly all the way down to the 60-minute, because the levels are so clean they almost look drawn by an institution. On the weekly, prices just blasted through a 2-year range resistance that sat at 175. The old high is now support. The weekly moving averages are completely useless for resistance. The 20-week MA is down at 142, the 60-week at 136, and the 200-week MA is all the way at 135. Price is trading 35% above its 200-week moving average. That is rare air. It means there is no historical anchor nearby, and the market is in pure discovery mode. The daily chart shows a massive bullish engulfing candle on results day, with volume that, while not officially reported, is clearly institutional because the move was immediate and vertical. Moving averages on the daily are stacked in perfect bullish alignment. MA5 at 159, MA10 at 149, MA20 at 142, MA50 at 138. Price is 40 to 50 points above every single one of them. When you see that separation, you're not looking at a trend, you're looking at a liquidity vacuum. The ADX is at 24.89, which confirms that the trend is strong but not yet exhausted. However, the MACD line on the daily is reading 31.56, a level that historically precedes multi-day consolidations or sharp intra-week reversals. Now, drop to the 4-hour chart and you'll find the first real technical tension. While the price is making a series of higher highs, the 4-hour RSI is pinned at 100 but the MACD histogram is starting to flatten, the beginning of a potential negative divergence. This is not a sell signal on its own, but it is a warning flare. Here's what most traders miss. In a melt-up driven by a catalyst like an IPO narrative, the first divergence often produces a very fast, very deep shakeout that recovers within hours, trapping both late longs and early shorts. That is the trap I mentioned in the hook. The 60-minute chart gives us our precise battle lines. The key support levels are 189, which is the prior resistance and psychological breakout point, then 175, which is the monthly breakout level, and then 162, the pivot point calculated from the entire range. On the resistance side, 198 to 202 is the critical zone. 202 is the upper boundary of the breakout projection from the range, and it aligns with the round number magnet that algorithms love to target. If 202 breaks with conviction, the next stop is a vacuum move to 220 and then 250 as the IPO mania fully unpacks. But if 202 holds and we see a rejection candle on the daily, that is your cue that smart money is distributing into strength. Cross-asset linkage is screaming right now. SpaceX is moving tick for tick with the most aggressive growth names in the Nasdaq. When the Nasdaq futures print a new high, SpaceX adds 10 points instantly. The correlation is so tight it's almost a leveraged ETF on tech sentiment. That means if you are trading SpaceX, you must keep an eye on the NQ futures, because a sudden VIX spike will hit this asset twice as hard. Yesterday's news changed everything. SpaceX announced it will release its results exclusively on the X platform, completely bypassing traditional wire services. That is not a trivial communications decision. That is exactly what a company does when it is preparing for a major public offering and wants to control the narrative directly with the crowd that will buy the IPO. Markets are not reacting to the actual financial results, they are reacting to the signaling. The implied message is, we are getting closer to a SpaceX IPO, and we want retail and institutional attention on our own terms. This is what front-running looks like. When you combine that with a broader macro environment where inflation data is being weighed carefully and the Fed's path is still uncertain, you get a perfect speculative storm. Analysts are moving targets higher, retail is piling in, and the lack of official wire coverage creates an information asymmetry that drives price discovery into overdrive. For the next 1 to 2 weeks, my directional lean is higher, but with violent intra-week air pockets. The exact event that invalidates this bullish lean is a daily close below 175. If we lose the monthly breakout level, the IPO narrative gets pushed out and the price will mean revert toward the 135 to 148 support zone. Now, second interaction trigger. Do you think SpaceX breaks 202 this week? Comment yes or no right now. I'm tracking consensus in real time, and the split between believers and skeptics often marks the tipping point. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to give you 3 precise trading plans with exact entries, stops, and targets. These are not vague ideas. They are sniper-level plans that you can screenshot and execute. Let's start with the conservative approach, Strategy 1, the sniper. This is for traders who refuse to chase and want to buy into a pullback with institutional confirmation. The trigger condition is a 1-hour close above $189 after a retest of that broken resistance zone support. We wait for the price to drop back to 189, show a bullish rejection wick, and then reclaim that level on a closing basis. The entry is 189.00 on that 1-hour candle close above. The stop loss is placed at 186.20, just below the intraday liquidity sweep that formed during the initial breakout. That's $2.80 of risk, which is well within 1 ATR since the 14-day ATR is 14.89. Take profit 1 is 196.50, the level where the first sellers stepped in intraday. That gives you a risk reward of 1 to 2.7. Take profit 2 is 202.00, the top of the breakout zone, giving you a risk reward of 1 to 4.6. Invalidation is simple. If any 4-hour candle closes below 188.00, the setup is void. We're not chasing a falling knife. The sniper, conservative, entry. 189.00, 1H close above, stop loss. 186.20 take profit 1. 196.50 take profit 2. 202.00 risk, reward. 1:2.7R. 1:4.6R invalidation. Void if 4H candle closes below 188.00. Strategy 2, the active trader. This is the standard setup for those who want to participate in the ongoing momentum but with a structured plan. The entry is a breakout above 193.00, triggered by a 5-minute volume spike that clears the overnight high. We enter at market on that spike, with a stop loss at 189.80, just beneath the nearest 5-minute support and below the psychological 190 handle. That gives you a clear invalidation point. Take profit 1 is 198.00, the next minor resistance before the big 202 level. Once TP1 is hit, immediately move your stop to break even. Take profit 2 is 202.00, and we add a trailing stop rule. Once TP2 is within 3 points, we trail the stop by 5 points to lock in gains if the breakout stalls. Risk reward to TP1 is 1 to 2.6. Invalidation. If the breakout fails and price falls back below 191.50 within 30 minutes, the trade is a false breakout and we exit manually. Type your SpaceX range for tomorrow in the comments now. Let's see who's aligned with the institutional structure. The active trader, standard, entry, 193.00, breakout on 5-minute volume spike, stop loss, 189.80 take profit 1, 198.00 take profit 2, 202.00 trailing stop, move stop to entry after TP1 hit risk or reward, 1:2.6 R invalidation. False breakout if reclaimed below 191.50 within 30-minute strategy 3, the aggressor. This is the high-risk, counter-trend play designed to catch the mean reversion snap when the euphoria exhausts. Only for those who can lose small and manage risk aggressively. We are selling into the 202 resistance zone. The entry is a limit short at 200 and 2.00. But only if we see a confirmed bearish divergence on the 15-minute RSI where price makes a higher high and RSI makes a lower high. That is the exhaustion signal. Stop loss is at 205.50, above the potential liquidity run that stops out early shorts. That's a $3.50 stop. Take profit 1 is 195.00, the prior intraday consolidation, giving a risk reward of 1 to 2.0. Take profit 2 is 189.00, the breakdown support, giving 1 to 3.7. The explicit warning. This trade bets against the strongest daily trend we've seen all year. If the daily candle closes above 203, the entire correction thesis is invalidated and you must cut it immediately, no exceptions. The aggressor, high risk, entry, 202.00 limit short, 15 minutes RSI bearish divergence, stop loss, 205.50 take profit 1, 195.00 take profit 2, 189.00 risk, reward, 1:2.0 R 1:3.7 R warning. Counter trend, for aggressive traders only invalidation. Daily close above 203.00 voids the setup never risk more than 1 to 2% per trade. With an ATR this wide, position size must be calculated precisely. No positions through high-impact news, especially Fed minutes or any SpaceX IPO filing headlines that can drop without warning. Stops are non-negotiable. This is how you survive to trade the next big move. The single most critical level for the next session is $202. Above it, the melt-up enters a liquidity vacuum where price can rally 20 more points in hours. Below it, and we watch the 189 trapdoor. Tomorrow's focus shifts to whether the daily candle confirms exhaustion with a shooting star or a doji at this resistance zone, and how Nasdaq futures react to the Fed minutes whisper. If you want the full breakdown on Bitcoin and the S&P divergence that is flashing a macro warning right now, that video is live on the channel. Tap the end screen to continue the session. Smash like if this gave you a clear plan for SpaceX. Subscribe, hit the bell, and I'll see you in the next one before the market opens.